Yo, what's up friends? Today I'm gonna teach you guys how to get rich quick. From $0 to $1 million in one day, okay? Just press my Forex trading seminar link down below. I'm just kidding guys, I don't do any Forex trading. I don't have any trading seminar. But the purpose of this video is to educate you guys on how you guys can make use of the greatest wealth building machine in history, which is the stock market, and how you guys can profit by just investing for the long term, okay? Repeat after me. For the long term, okay? Yeah, and all those stuff you see online that tells you how you can get rich quick, if it seems too good to be true, it most likely is. So don't get scammed, okay? This is the only video you need to understand the stock market and what shares are, and also jargons like ETF, bonds, and dividend. And hopefully after this video you guys can learn a thing or two and then start investing, and make sure that you guys have no more excuses to not invest, okay? Or else I'm gonna get pissed. Alright, before you start investing, you gotta know why you're doing it. You gotta know why you invest. Because if you don't, you will most likely throw it in the back of your mind and then not invest at all, okay? And you will most likely be the old man or old lady that complains when you're 70 years old, be like, oh,
I am so old, why am I still working? I want to retire. I hate my job. I hate my life,
Here are the 3 reasons why you should invest in stock market. I'm sorry if I sound like a broken recorder, but I'm gonna repeat it again. Compound interest. You gotta make use of that time and that money when you're young, so that it can snowball into a very big lump sum by the time you retire, okay? Assuming you have $500 invested every month, you can easily have more than $2 million by the time you're 65 years old. Trust me. This model is pretty conservative. I'm pretty sure you and I can do a lot better than this. Next, here's a cool way of how I think about investing in stocks, and you should too. Imagine letting the smartest people like Elon Musk, Jeff Bezos, Tim Cook working for you to make you money. How cool is that? You can even go around telling people, oh, I own Apple, I own Tesla, I own Microsoft. Lastly, it is actually more risky if you don't invest in stocks. You know why? Because of inflation. You're actually losing money if you don't invest and just put your cash under your bed. Here is an Excel model of how $1,000 invested now in different financial instruments for 50 years might become in the future. Assuming cash loses 2% every year, bond makes 4% and stock 8%. In 50 years time, $1,000 as cash will only be worth $379, and stock will be worth almost $40,000. That's like 40 times return, dude, okay? So, as you can see, if you're not invested in the stock market and not smashing the like button, you will be on the losing side of this money game, okay? You smashed it? Okay, thank you. In return, I'll give you a picture of my cat. Okay, now that you know why you are investing, but how much should you have before you invest? Here's how I do it. I budget myself every month and calculate how much I need to survive for the month. I include rent, transportation, grocery, gym membership, and after that I just chuck everything into my savings account and my investing account. As a general rule of thumb, make sure you have at least 3 months worth of living expenses saved up. So in case if you lose your job, you don't have to go on the street and like scramble for food, Of course, the more the better, okay? You can save up to 6 months. And after that, I'll just chuck everything into my investing account and make sure that the money starts working as soon as possible. Here is a bonus tip for you guys. Live like you are broke. Because in your 20s, nobody will expect you to have a Lambo or like a house. So that's the best period of life where you guys can just accumulate as much money as possible and then save as much money as possible at that time. Also, pay down any debts that you have, because that's a guaranteed loss you will have if you don't pay it off. Alright, so now that those are out of the way, let's get into the meat, okay? What are stock markets? What are shares, and also, what are the types of investing styles? Imagine you have a lemonade stand in your garage and you're selling lemonade to your neighbors. Everyone is lining up, everyone wants your lemonade, okay? Your business is booming, everyone wants to buy, and you're earning like $100 every day. And now you want to expand your business. You want to sell it to opposite street, okay? So what do you need? You need a juicer, you need labor, you need a stand. So all this costs money. So where can you get that money from? First, you can go to the bank and ask for a loan, and in return you have to pay them interest. Or second, you can go to the stock market and you sell part ownership of your business to the general public in the form of shares. Imagine you have 4 shares in the business and you want to have 50% ownership in the company. So you can only sell 2 remaining shares to the general public. You are gonna sell each of them for $1,000. And then right now, me and Justin Bieber are interested in your business. We want to invest in you, okay? We each pay you $1,000 for 1 share. And then right now, you have $2,000 for your expansion plan. And me and Justin Bieber each have 25% stake in the business. And in return, when you make money, you have to give us back some of that profit. And that profit, that payment is called dividend, okay? It's just basically distribution of profit. And of course, that was just an oversimplified version of how stock market is, okay? And like Apple, they probably have millions of shares outstanding. When you buy 100 shares of Apple, your ownership will probably be like 0.000000001%, you know, it's not meaningful. But yeah, stock market is just basically the place where buying and selling of shares take place. And how you can make return from shares? There are 2 ways. One is when the stock price rises, when people are willing to pay more for the company because the company is doing well. Or you can get them from dividend, which is the profit distribution. Here are the 3 most popular ways of investing: value investing, growth investing, and trading. Value investing is when people buy the company when they are cheaper than they should be, and hopefully in the future the market will price them accordingly to its true value, and so the stock price will rise. And then growth investing is when people buy companies that they think it will be worth a lot more in the future because they are growing at an insanely fast pace. A perfect example can be Tesla, Square, Amazon, all this. They usually have good metrics like 40% growth, 50% growth, 100% growth on their customer base or like revenue. Value investing is all about buying stock below its worth, and growth investing does not concern about the price. All they do is they look ahead. Even though they might be paying expensive price today, but they are anticipating that the stock price will be worth more in the future. Then we have the infamous trading. It's the stuff you see on the movie, like Wolf of Wall Street, where people are throwing papers, yelling and shouting, "Oh, it's going down 2%, it's going up 2%. You know, get in now," you know, all those people. What they do is they buy and sell a particular stock or foreign exchange. Very frequently, they buy in, sell out, looking for opportunity to buy and sell all the time, looking at graph, charts, table, you know, all those, looking at news. Those are their job, okay? But I'm just saying 90% of them don't make any money, so you know, make sure you don't fall for any of those forex trading scheme you see on the Instagram, okay? Oh wait, here are the last 2 ways of how you can manage your investment. Active investing is when people actively look for companies to invest and always looking for opportunities to buy and sell the company. And then passive investing is when people just buy and hold the investment until they retire. And then also, passive investing is actually the most effective way of investing. Now that I've introduced you to what they are, I'll tell you what you can buy through the stock market. Interestingly enough, they don't sell just shares. You can also buy bonds and commodities through them. Bonds is just like stock. Okay, stock is a piece of paper that proves that you are the owner of the company. Bonds are also a piece of paper that proves that you have lent someone money and that they have to pay you back. Stocks usually have higher risk and also higher return, and bonds have lower risk and lower return. You can also buy ETF, which is exchange traded fund, which is a financial instrument that tracks the performance of a certain industry, commodity, or market. Think of it like Pokemon Ditto, okay? It just copy whatever he see. And let's say you want industry, okay? It just copy industry. And imagine if you want to have exposure to the US market and have 500 largest companies in your portfolio, what you can do is you can just buy an ETF called SPY. It basically just tracks the performance of the US market instead of buying companies one by one from the list. Last but not least, brokers. It is someone who acts on your behalf and buy and sell shares for you through the market. Last time, only the rich people had access to broker, but then nowadays, we basically see it everywhere, like eToro, Stake, Robinhood. Just pick the cheapest one and you're good to go. If you're new to this, I suggest you to start from investing apps like Raise, Stashaway, Acorns, all this, and they basically just help you invest through apps. It's very accessible, you can see it from your phone. And they usually charge you around 0.2% to 0.8%, which I would say it's pretty reasonable for me. So yeah, you guys should definitely check that out. Hi guys, sorry, my camera died, so I had to use my iPhone. But yeah, if you guys have any questions you want to ask me, make sure you drop it down below at the comment area, and I'll make sure to reply every single one of them. And yeah, thanks for your time. Thank you for staying until the end of this video. I hope you have a great day, and I'll see you again.